Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you would like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today, I'll be looking long term at US dollar against the Brazilian real. 2021, and to a large extent the latter half of 2020 as well, has been the wide if boring sideways market that was the final follow-on action to the combined, if smaller in range, bullish ascending triangle and bullish ascending broadening wedge pattern formed in 2019. The topside targets were achieved back in early 2020 and we had a somewhat strong follow-on higher, but since June 2020 the market has kept within a wide range of 481.85 to 597.27. Indeed, a lot of the action has been centered around the 50% Fibonacci line of the May to June 2020 move at 539.56. Interestingly, the old patterns of 2019 and the lagging supports had actually finally caught up with the market back in June and July of this year, when we saw prices test down to the 2-year moving average, currently at 541.26, and the upper wedge trend line, currently at 501.5, of the original 2019 based bullish ascending broadening wedge pattern. However, the market did not like it down there and was rebuffed back higher, with a further rebuff higher still from the 2-year moving average in August and September of this year. We now also have the 3-year moving average, currently at 486.65, moving up into the frame, no doubt adding its support when it becomes available. At the same time, the market has been very reluctant to explore higher since it peaked back in May 2020. There seems to be a marked reluctance to venture much beyond the 580 even area, and even a reluctance to approach it. This could lead to an interesting situation, most probably around the middle of 2020, when the bullish pressure higher from the trend line and the moving averages will start squashing the market against the 580 even area. Something will have to give, and it will be interesting to see how that develops in 2022.